This episode of Back to the Roots podcast is brought to you by Byron Seeds. The folks at Byron Seeds believe organic requires a different perspective, plan, and approach. Organic isn't simply a different type of product or even a different way of farming. It's a different way of thinking, planning, commitment. It's a different philosophy on how to feed the world. Many won't understand, but the people at Byron Seeds do. We're owned by organic dairy farmers. We not only have the product, but we plan, manage, and execute organic. We speak your language, we share your struggles, and we laud your successes. Organic isn't a way of doing business, it's a community. We learn from each other. We're in this together. We'd be glad to talk cropping plans, management systems, the road to profitability. We understand what you're trying to do. We're farmers just like you. Visit us at byronseeds.net or give us a call at 800-801-3596. And thanks to Byron Seeds. This episode is also brought to you by Mercaris. Mercaris produces the most comprehensive, trusted market analysis for organic and non-GMO agriculture. Do you have farm gate prices? If so, Mercaris invites you to join our farmer network, contribute your prices, and get access to the best information to run your farming operations. Get started by visiting us at mercaris.com/farm_gate_survey. And thank you to Mercaris.
Hello, this is Brian Koory, the Director of Economics with Mercaris, here with your monthly organic commodity outlook update. So starting off, it's worth taking a real quick look at what's going on in the U.S. with regard to weather and drought. We talked about last month some drier conditions forming in the western and the high plains regions of the United States, and to a large degree those patterns have persisted. We have seen some improvement in the Midwest, where we did have some drought at this point last month, particularly if you're looking at places like Iowa and Minnesota and Wisconsin. However, we do see some dry conditions persisting into Michigan and into Ohio as well. But the more significant drought conditions that we're really put on our radar at the moment that we're keeping an eye on are in South Dakota and North Dakota. If we look back at March update for market outlook, South Dakota had 0% of its land considered an extreme drought, D3 rating drought, while North Dakota had about 17% of its area covered in a D3 extreme level drought, according to the U.S. Drought Monitor. Those numbers have escalated pretty substantially. As of April 13th, we had about 19% of South Dakota covered under extreme drought D3 rating, while North Dakota had escalated to 76%. And those numbers don't look like they're likely to improve within the next week. If we look at our weather forecast over this weekend and into next week, we are expecting to catch some rain across the lower high plains and into the lower portions of the Corn Belt and into the southeast. However, North Dakota and South Dakota appear like they're going to likely miss the majority of that rain. It's likely to bring some benefit to some places that have experienced some dryness, particularly looking at Nebraska and Kansas, Colorado, and even all the way down into Texas, which has had some pretty substantial drought. However, North Dakota and South Dakota, for the time being, look like they're going to kind of be stuck in this dry weather pattern, at least for the next week.
Well, I know talking to farmers here that it's a big concern, just as far as even here in the Midwest where I'm located. It's something that's being watched very closely, let alone what's happening in the Dakotas. But just a real quick technical question for you on exactly how that drought monitor works as far as moving from one level to the next. Is it just precipitation? Is it just ground moisture? Is it a combination of it all? I know you might not be an expert, but just something for farmers to be watching.
And I'll probably say just enough to show how much I'm not an expert in the methodology behind the drought monitor. But essentially what you're looking at when you look at those ratings within the drought monitor, and what they do is they break it down into quartiles or quintiles. They've got abnormally dry, moderately dry, severely dry, extremely dry, and exceptional drought. And really what you're talking about when you look at those levels is the amount of moisture available and for crop production. And it's a combination of expected precipitation. It's a combination of soil moisture levels, that there's snowpack that could be available, many different factors that they put into coming up with these numbers. But really what you're talking about, I think you kind of hit the nail on the head there. What moves the needle in terms of pushing a region from, say, D2 to D3 or to D4 is precipitation. If an area can catch some precipitation and get some steady rains or some good snow cover, it'll help bring them back and add to that moisture profile. Vice versa, if you happen to not catch moisture, not catch the rains that you need, kind of like the pattern that we're seeing in the Dakotas, you tend to see an intensification of that drought rating as those available moisture stores for crop production become depleted. So taking a quick peek in at livestock, there's not a whole lot new to be talked about here. Looking at the month of March, federally inspected broiler slaughter, we saw it average about 190,000 head per operational day over March, which is pretty close to where we were at this point last year. Similarly, looking at federally inspected organic turkey slaughter, it averaged at about 9,000 head per operational day over the month of March. And again, that's pretty close to where we were at this point last year. One thing to keep in mind as we think about where we are within the year, it's really around April and May of last year that we saw these numbers dip pretty significantly as COVID-19 started to really set in, and we saw quarantine activity set in, and we saw slaughter facilities begin to shut down and transportation begin to grind to a halt. And with that said, we really don't expect to see that occur over the next couple of months because not that COVID has gone away as an issue, but a lot of the logistical problems have been corrected, and access and the ability to keep these facilities open and processing animals seems to not be as substantial of an issue this year.
Well, sounds like pretty much steady as she goes right now. But speaking of COVID, certainly as vaccinations ramp up, as people get more comfortable going out in public and spending time at restaurants and traveling, whatever it may be, getting back more to normal, some of these numbers very well might take a dip. And just a question for you as we move forward here would be, are there any indicators that you would watch or any particular organic livestock markets that could be knocked back a little bit by less grocery store shopping and less time at home?
Yeah, absolutely. That was one of the things that was to the benefit of the organic industry over the last year as COVID became such a substantial issue. U.S. consumers started switching towards grocery stores and away from restaurants. And with that transition, that put organics in a very advantageous position because the organic industry does not have as strong of a footprint in restaurant space as it does in the grocery stores. And so what we saw last year is as consumers made that transition to eating more food at home, not only did that grow that pie in terms of grocery store sales that organic industry can take advantage of, but we also saw the organic industry slice of that pie expand. A higher percentage of those sales were organic. And so the organic industry did experience some pretty substantial consumer demand growth last year as a result. And I think you hit the nail on the head there. I'm as guilty as anybody else. I've eaten at more restaurants in the past month than I probably have the 8 months prior to that. And that's a factor of the fact that the cases of COVID are starting to come down. People are becoming vaccinated. Weather's nice so that you can go sit outside and eat if you prefer. There's a lot of factors that are allowing people to go back into that restaurant space, and we're definitely starting to see people do that. And with that transition, the natural ebb will be there will be less foot traffic and less consumer sales in grocery stores. The big question is going to be, as the market starts to shift back towards some of those eating behaviors that we had prior to COVID, how much will grocery store sales reduce? And not only that, but how much of the pie, that share of the pie that the organic industry was able to expand, how much of that market share will the organic industry be able to hold on to? And really, if you're talking about areas that could potentially be exposed, it's pretty much all areas of the organic industry. But really, some of your protein goods are going to likely be some of the ones that are hit hardest because they saw some of the largest growth, particularly looking at things like dairy and eggs, things of those nature. But yeah, it could create a challenge for organic sales as we look at this next year, as people do continue to transition back into eating more food out of the home. But the exact impact we won't really know until we get farther into this, just how quickly and how much people move those dollars back into into restaurants rather, and also how much of that share of grocery store sales that the organic industry was able to capture over this past year, how much are we able to hold on to that market share as well? So there's a couple of moving factors that we need to keep an eye on, but both of those factors could absolutely lead to a weakening of consumer demand within the organic sector over the next year. So taking a quick look at trade, there's not a whole lot new to be discussed within organic trade. One thing that actually did occur that was somewhat interesting over the month of March is we did see a jump in whole and organic cracked corn imports. Over the month of March, we estimate organic whole and cracked corn imports hit about 60,000 metric tons, which pushes it up to about the third largest shipment, or rather the largest shipment we've seen since October of last year. And there's really two factors that go into that rise. First would be a pretty substantial shipment of organic cracked corn arrived at U.S. ports from the Black Sea region over the month of March. And then the second factor being a pretty substantial shipment of organic whole corn from Argentina over the month of March. Whenever we look at the Argentina shipment, it is a little bit unusual. Generally, what we tend to see is the seasonal factors within organic corn imports from Argentina actually kind of tend to follow the U.S. marketing year. We generally see more importations from Argentina over the harvest and then into the first quarter of the calendar year. And actually, this year we saw those slow down. So it's pretty interesting that we're seeing a sudden spike up over the month of March. It could be a flash in the pan issue, or we could just see delayed shipments that were put off over the first half of this marketing year when organic corn prices were depressed. The second factor, that organic cracked corn imports, that's actually kind of consistent with what we talked about last month in terms of shipments from the Black Sea region do actually generally run countercyclical to U.S. organic corn production. It is generally over the second and third quarters of the year that we see those numbers start to escalate. And so to see that jump up over the month of March, that's actually pretty consistent with what we might expect to see, particularly as we're starting to see the U.S. organic corn market dry up. We're starting to see the supply position tighten a little bit. And with that tighter supply position, we're starting to see some more price support. Over the 2-week period ending April 3rd, what we saw in the United States is the average price for organic feed grade corn delivered to Corn Belt elevators averaged about $7.85 per bushel, which is down a little bit from the start of March, but it's still pretty close to the $8 per bushel level that we've seen contracts reported at really since the middle of February. Turning to take a look at organic soybean imports. Organic soybean imports and soybean meal imports are really just a continuation of the story that we've been telling since the start of this market year. Over the month of March, organic soy imports remained lower year over year, and this really is just a continuation of what we've seen overall. If we look at the pace of organic whole bean imports into the United States, looking at September through March of this marketing year, we're looking like we're down about 35% year over year. But on the flip side of that, the pace of organic soybean meal imports remains pretty phenomenal. We estimate that over the month of March, we imported somewhere around 38,000 metric tons of organic soybean meal imports, and almost entirely sourced from India. And this is kind of an interesting factor because one of the things that we're seeing within the market is, and we've heard reported within the market, is a tightening of U.S. organic soy supplies. And it's absolutely true that we're seeing a slowdown in whole bean imports. But from a domestic production perspective, we estimate that in last fall, we harvested about 8.2 million bushels of organic soybeans in the United States, which is up at about 9% year over year. And then given the phenomenal pace of organic soybean meal imports this year, if we look at our total U.S. organic soy supply through the end of March, converting those beans to a whole bean equivalent, we estimate that we're sitting at somewhere around 20.5 million bushels of organic soybean supply in the United States, which is up about 16% year over year. But even with that supply position, we continue to hear reports of the market struggling to source organic soy, and we're seeing prices become elevated as a result. Over the month of March, we've seen some contracts come in as high as $29 per bushel delivered. That's definitely on the higher side of what we see in general. Our market surveys captured prices between the $22 to $25 per bushel range for organic soybeans delivered to U.S. Corn Belt locations. But we're talking about a price range that's anywhere from $3 to $5 dollars per bushel higher than what we were talking about looking back even at January. So it's become kind of a challenging situation for organic soy in the United States.
Yeah, it's certainly been a big conversation in the organic industry right now, and it's just not quite adding up, everything that's being said there. As far as imports being up, domestic harvest numbers being up, but then prices also being up significantly. Is there anything that's pointing the finger at what may be happening here, or is this just going to be one of those wait and see what happens moments?
Yeah, in terms of what's caused this, it seems to be pretty strongly indicated that this is all following a combination of actions by the NOP against India that occurred in January, where the NOP essentially ended the equivalency agreement between the United States and India, under which the majority of U.S. organic soybean meal imports have been sourced. In addition to that, we also saw India crack down domestically on their organic industry and go through the process of revoking some organic certifications. And then the third factor there that kind of has come in to make this also more complicated is just the general state of global trade and the ability to source shipping capacity and the challenges we're seeing within logistics. And so those three things really kind of coalesced over January and February and really became the catalyst for the industry reporting this tightening within the market. Now, what's interesting with that is, despite all those factors, we really haven't seen a slowdown of organic soybean meal imports, which would be the organic trade that would be most affected by the NOP's actions against India, as India's sources provide somewhere between 80 and 90% of our organic soybean meal imports, and organic soybean meal imports account for about a third of U.S. supplies. We just haven't seen that number slow down despite that information. And so it's not a situation that we can clearly point our finger at any one factor and say, this is the factor that's causing the tightness, so once this factor changes, things will improve. Or conversely, as this thing gets worse, things will tighten. Fundamentally, the market is not tight on supply. However, there's clearly a situation in the market where buyers are having a hard time sourcing spot supplies. In terms of, looking at how long this situation could persist and become a factor within U.S. markets, the truth is, we could see this continue to be something that pops up all the way until perhaps harvest of 2022. The action the NOP took against India in January, the way that it's laid out, essentially, if you are an organic exporter within India, you have until July 12th of this year to apply for recertification under the NOP. So long as you've applied for recertification by that July 12th date, you will not lose access to U.S. markets. Following that, you have an additional year to complete recertification. So if you are someone within India who is producing and shipping organic soybean meal to the United States, you essentially have a year and a half from that January announcement, so long as you are taking steps to recertify, before you lose access to U.S. markets. And even without that, you have until July 12th of this year before you lose access to U.S. markets, even if you weren't taking steps. So it's one of those things that, as this policy becomes gradually implemented and fully sets into the U.S. market, it could lead to impacts on U.S. imports all the way until we get to next year's harvest. So it's likely going to be a boogeyman that we're going to be paying attention to, and we're going to be watching its impact on those organic soybean meal supplies for the year to come, until perhaps the harvest of 2022, to be completely honest.
Well, and I'm pretty sure that every one of these topics, the bigger topics we hit on today, is going to be something we're going to be watching very closely over the coming months, whether it's the onset of drought across big swaths of the country, or the impacts of COVID and returning to normal, or the soybean market. And certainly that's something, all that stuff is things we'll be following up on in the coming months. And really appreciate the information that was here today, Ryan. And thanks a lot for your time, and thanks everybody for listening.
Thanks, Brian.